Hi, my name's Glenn Hasselman. I'm just making this video for the users of free accounting software to show you guys how to record inventory in free accounting software. So I've made up a bit of an example. I was initially thinking I might just use something generic like an example of a widget purchase and sell, but I thought I'd make up an example so that it'd be more relatable, and I'll use this example through these inventory videos. So there'll be a few videos. We'll start simple and work our way up. So the story is Wendy has a friend called Zed who is a farmer. Zed has a lemon orchard and grows great lemons but does not want to muck around selling them. Wendy offers to buy the lemons at wholesale prices and intends to sell them at the markets for a profit. Knowing the importance of record keeping, Wendy decides to use free accounting software to keep an accurate record of inventory. Okay, so in this first inventory example, we're simply going to be buying lemons by the box and selling them also by the box. So I've set up this organization or business in free accounting software, and the first thing I should point out is that this organization that I've set up here is a Bassoff cloud hosted business. So the file is on Bassoff, and that's important because the features of inventory are only available when it's a hosted file. So when you create your new business, you can choose between a locally stored file, which is free, or a Bassoff cloud file, which is a pretty low cost. And when you choose Bassoff, you do get some additional features, one of which is inventory. Also, sort of want to point out at this stage, you can put in some things on the local file. So you can record a quantity against a sale or a purchase, and that may serve your purposes. A lot of micro businesses might have inventory, but don't need to track the purchases and sales of inventory through every transaction. So there are simplified trading stock rules, and you may be able to simply do a stock take or even just an estimate of your stock at year end, and that might be sufficient for your needs. So going to this business, now this is just a sort of freshly set up template, and I've set up two counterparties, being the customer, I've just called the customer, and Zed, who is the farmer that supplies the lemons. Now, what I will demonstrate is how to set up the accounts for this. So the first account we're going to set up is just called, I'm just going to call it box of lemons. Okay. It's going to be the income account, so this is the sale of lemons, and the default code is, it actually is going to be GST free sale because it's fresh fruit. Okay, so that's pretty simple, and there's another account to set up. So it's now two accounts, so we need three accounts. One is the sale, the second one is inventory, and the third one is the cost of goods sold. So this one, I'll make this inventory. In this case, I'm not just saying box of lemons, I'm saying inventory dash box of lemons. I put the word inventory first so that it will sort. If you have multiple different types of inventory, it will sort or group them up on the balance sheet better. And this is going to be an asset, so it's on the balance sheet. active is true, and the default tax code will be a GST-free purchase. These default tax codes can be overridden if there was, GST charged on it for some reason when you do the purchase. It was just the default. Anyway, I'll save that, and then the other account we need is called cost of goods sold. So I'll just say COGS, because cost of goods sold is a little bit long-winded. And cost of goods sold is an expense. Now the default tax code, I'll put GST not applicable, because this is just actually not used on a purchase. This is used on the cost of goods sold is when you transfer the cost of the boxes of lemons from inventory to cost of goods sold. Okay, and then I'll save that. Now, we need to set up some of these calculation rules. So that the idea is that when we sell the box of lemons, the software will automatically, so if we sell one box, the software will automatically take one box out of inventory and put it into cost of goods sold. So firstly, I'll demonstrate how to do with this inventory account. So we just set this up, but I didn't set this calculation rule info up, so I'll set that up now. On this page there's only three things to set. The amount calculation method should be first in, first out. There is a standard rate, but it's not as good as first in, first out. First in, first out will actually track which purchases you have on hand and makes reconciling inventory a lot easier. So the calculation method we're going to use for this inventory is first in, first out. Now, the provision to use on calculated transactions, that would be GST not applicable. So this is not a purchase. This calculated transaction is the transfer of the inventory from the balance sheet inventory account to the cost of goods sold account. So we're going to debit cost of goods sold and credit inventory, and that transaction is not a purchase, so it is GST not applicable. Calculation rule stage is used for manufacturing. Okay, so this is probably getting to actually a little bit complex stage of manufacturing. We have multiple stages of manufacturing something. For this simple example, we don't need to worry about. So I'll save that. Now we need to set up the calculation rule. Okay, it can actually be, so I'll click on this, and this page would show you a list of calculation rules. It can actually be multiple calculation rules, but we only need one for this. So I guess the first thing is to give it a name, and call it cost of goods sold inventory. Not inventory. Something that you sort of remember what you're trying to do with this calculation rule. Now, most of these fields here are all to do with payroll. So these calculation rules can be used on payroll, and you can actually put in your timesheet for the employee and put the start and finish times, and the software will calculate how much normal time, time and a half, double time, or allowances and things like that to pay. So, we can pretty safely ignore everything right down to there. before I explain these last four fields, let me just do this bit on the right. So it says the rule is triggered by selected accounts. So the one we want is box of lemons. Okay, so that's the account we're going to use for the sale. So when the sale goes through and it's selling a box of lemons, that's when this calculation rule gets triggered. Now, you can actually select multiple things. So if you have some reason, like when you learn how to use it, you might have calculation rules that trigger on you might have fairly similar kinds of things that you sell. But anyway, for this example, it's just the one thing that will trigger it. Now, hours, quantity, or 1 unit. All right. So what this means is we want to match the hours quantity of the rule. So if you sell 5 boxes of lemons, you want 5 to come out of inventory. The calculation rules are very flexible, and you can set them up for different purposes. So there might be situations where you don't really care how many you sell, you just want one thing to come out. And that's what you're choosing there. For the simple setup, you just want to select hours quantity of matched rule. Okay, the hours quantity unit multiplier. Well, what that is that you might want to scale up or down the amount. So you might sell a larger, or you might sell in larger or smaller quantities, or packaging up groups of things. And in our case, we're selling one for every time we do a sale. The quantity on the sale is 1 box of lemons. We're buying per box as well, so it's just 1 for everything we sell. It's just same quantity. Apply rules separately for each day. We just want to put no. It's probably more of a payroll thing than an actual inventory thing. Transaction type. Okay, so this calculation rule will result in a separate transaction. The transaction to debit cost of goods sold and credit inventory is separate to the sale. Right? The sale is a sales invoice, just has the amount you're selling on it, and then a separate transaction gets created for the cost of goods sold journal. So we want to select the transaction type of general journal and then save. This kind of setup is pretty standard. So if you've got simple kind of inventory requirements, you don't really need to understand all this in depth. You can just copy this setup. We need another calculation rule. So if I go back to the account list, that calculation rule we just set up is going to only calculate the one side of the journal, and which is the credit to inventory. We need to set up a calculation rule on the cost of goods sold account as well. Just edit that. Now, okay, so this is now the debit to cost of goods sold. In this case, we do not select first in, first out. The inventory account is where the balance of the the value of the inventory gets determined, and that's the one that has the quantity left remaining and in it. So this side of the transaction is the balancing line. So so we want to select the second option here, which is the balance the calculated journal to 0. Okay. The provision to use on the calculated transaction is GST not applicable. I've used this word provision and tax code sometimes interchangeably. Provision and tax code, I just mean that the tax code, it's the same thing. Okay, calculation rule stage, we don't need to worry about that. So not doing manufacturing here. Okay, now we need to set up the calculation rule. So we're going to do a new calculation rule and just call it cost of goods sold. Now this applies when to the same account, so it applies when you're doing a sale of a box of lemons. Okay. Again, we ignore all of the payroll things. We want to match the hours quantity of the match rule. And in this case, the hours quantity unit multiplier, we actually want -1. So when you're doing a sale, it's a credit to sales revenue. Okay, that's to increase sales revenue. The side of the journal we did previously, which is the calculation we set up previously, was for the credit to inventory. So the sale being a credit and then the reduction in inventory being a credit, the multiplier is a positive one. In this case, we want a debit to cost of goods sold, so we actually want a -1. Okay. Again, don't worry too much if you don't fully understand that. If you've got simple requirements, you just got to remember to put a -1 on the cost of goods sold side. Separately to each day, I'm putting no, and the transaction type, we're doing general journal. Okay, so this is going to go onto the same general journal as the inventory, as the credit to inventory. This is the debit to cost of goods sold. Anyway, so save that. Now, having set up those rules, the next thing we want to do is purchase some inventory so that we can sell it. You can do this on the purchases worksheet. I've noticed that a lot of people just go straight to the cash worksheet because they're paying for stuff as soon as they receive it, or so people tend to just save themselves the two transactions, being the purchase and then the later cash payment. Although the purchases worksheet is good for tracking payables. But anyway, keeping it simple, just going to do a cash payment on the 1st of July to Z, buy some lemons. Now, I'm not even sure how much these things would cost, but anyway, the account we want to put is inventory box of lemons. It's defaulting to that default tax code that we set up previously, and let's say we buy 10 boxes at a rate of let's say $10 per box. I think that's a pretty good deal. Now, the other thing I want to point out on this is that we've got this quantity and rate input boxes here. These boxes don't always display on your screen. So if I minimize or shrink the screen, the software sort of realizes, well, there's not enough space to neatly display it, and it hides it. I do these videos on a quite low resolution, with the idea of that you'd be able um, to put it to one side while you follow along in the software on the other side. Now, and it's also tricky to get the text to display nicely on the video. So what I'm actually doing this video at a higher resolution than what I normally do. It's still quite a lot smaller than most computer screens, so you should easily be able to get the quantity and rate to display. If you press Control minus as well, you can actually shrink the font, and that the software sort of realizes it's got more space, so it will display some additional first. Is in fact a start date, start time, end time, and break, where you if you want to sort of record or charge people on a per time basis as well. So if you press Control minus, you can shrink it. If you press Control plus, it enlarges it, and Control 0 takes it back to the default. Okay, so anyway, having saved this purchase, we should be able now to sell some lemons. But first, let's have a look at the balance sheet to see what's going on. So we have got an inventory account called Box of Lemons. It's got $100 in the account there and a quantity of 10. Negative cash at bank normally can't really happen, but anyway. Okay, so now I'm going to go to the sales worksheet and sell some lemons. So we do a sales invoice, date this the 2nd of July, and pick up the customer. I'm going to put Box of Lemons and sell like 3 boxes at $20 each, and then save. Okay, so probably should point out that you've got a PDF of your sales invoice here. I'll just save that. Okay, so this is the default template, and it basically says Box of Lemons there, which is what we call the account. Quantity is and rate is just in this comment, and the excluding GST, and amount is there. Now, I think if you are frequently or always selling based on quantity, you'll probably want to customize this and put a column of quantity here, or remove these GST columns and put a quantity, rate, and amount columns. Then at the bottom you add the GST and then put the total, and that can be changed onto a separate video on how to customize the sales invoice. Okay, so let's go and have a look at our balance sheet and see what's going on. So in our inventory account, we have now got 7 units, and it's at a total value of 70. So let's have a look at the transactions. And there it is. So we've got buy some lemons, we've got the 10 we bought, and the 3 we sold. Now, on the left hand side here, there's this reconciliation number. This reconciliation number 2 shows you that these two transactions have actually been grouped together. So it's actually better than just having the -3 there. It's actually sold 3 boxes from that purchase. When that purchase runs out to 0, it'll actually hide this by default. You can still go back and see the detail, but the good thing is that it's not just tracking the actual total balance of your inventory, it's actually working out which batches or purchases have still got some stock on hand. And I'll just demonstrate some of that and a couple features now. So let's say we go to the sale worksheet and we want to do another sale on the 3rd of July to the customer, and we sell more lemons. Lemons, and let's say we want to sell like 9 boxes, $20 each. We go say error, insufficient stock for inventory dash box of lemons. Okay, so we purchased 10 originally, but we sold 3, so we actually only have 7 on hand. So the system won't let you sell 9. Okay, so we have to actually record the purchase of lemons. So let's say we have a second purchase of these lemons on the 3rd of July. We're buying them from Z. And we want to buy another 10 at a rate of, let's say the price is going up, so it's $11 per box now. Okay, so now we, well, quick look at the balance sheet, I suppose. So now we've got 17 in stock at a total cost of 180. These ones being a little bit more expensive, we've got the 110 we just paid plus the $70 from the first purchase that's still on hand to give the 180. So now we can sell the, let's say we sell the 9 on the 3rd of July. Okay, save. Okay, this time it's let us save, so let's see what's going on in the balance sheet. Okay, so we had 17 and we sold 9, so it's reduced it to 8, and this is the balance. So if we double click on it, we'll see what's there. Now this is a really nice feature because what it's saying is it's only just showing you it's showing us what we need to know, right? So basically simplifying the picture. So the first batch that we purchased is completely sold. It's not even displayed on here, and we bought 10, then we sold 7. Oh, sorry, we sold 3 in the first sale, and then we sold 7 in the second sale, leaving 2 left over to be sold from this purchase. So that's first in, first out accounting for inventory. That first batch being completely sold is, not on hand. When we look at inventory, we want to see what we've got on hand generally. So it's simplifying the picture for us here. The second, the two here that we've sold were purchased from this batch of lemons, and that they were at $11 per box. So the system knows that that's the purchase price here, so it's applying that rate. You can see the history by clicking on, in this case we're looking at the report on the 31st of July 2020, so we just need 1 month of history to see those earlier July purchases, and there you go. So in these purchases have been grouped together, and you can sort of tell that by this reference on the left there, and what it's saying is that the amount 0, so all of those transactions net to 0. You've got the $100 minus the 30 and then minus the 70, that nets to 0. So when we sold this second batch of lemons, which the description was sell more lemons, it's picked up 7 from the first batch at $10 per box, and 2 from the second batch at $11 per box. And if we want to actually see the journal that it automatically created, you can just double click on the transaction, and there it is. So we've got the cost of goods sold has been calculated at 92, which is the addition of the 70 and the 22 from the 2 batches of inventory. So you've got the debit to cost of goods sold and the credit to inventory. So it split the credit to inventory into 2 lines because it was from 2 different purchases and at 2 different rates. Also could have a quick look at the profit and loss to see there's our sales, 12 boxes, there's our purchases of our cost of goods sold of the 12 boxes, and that's the total cost of goods sold, being the first sale of 3 and the second sale of 9. And I think you probably agree with me that the way it hides these sold batches of inventory makes it easy to keep a record and confirm that if you do a stock take, confirm that what you've got on hand are these values, and that's the benefit of first in first out, which is why I highly recommend if you are if you have inventory and you are tracking the quantity of the purchases and sales and on hand, that you use the first in first out feature of the software. Okay, so that's it for the simple example of inventory. I will do a couple more of these videos. So yep, if you want to, if you need to do a more complex setup, then have a look at those videos as well. Okay, hope it's been useful, and thanks for watching.